Welcome, everyone, to our April 2026 podcast. My name is Carly Purcell. I am joined today with
Ryan Sheffer.
Derek Van Solkema.
Glad to have you here. April,
can you believe it?
can you believe it?
Yeah, we're knocking them down in the year 2026. We've been talking a lot. The month of April is where we go out and do our client luncheons. So we do a spring client luncheon, a fall client luncheon. Maybe you were able to attend one of those. We always appreciate an opportunity to give a unified message to our clients. But guess what we get to do here on the podcast? About the same thing. So it's been good getting out and seeing everybody. Again, the faith and confidence that you have in us is not lost on us. We understand the gravity of our work. So let's unpack.
Yeah, so April, good month in the market.
We got a good month. So the aggregate bond index, which is going to be cornerstone of a retiree portfolio or a component of a retiree portfolio. For those of you young, aggressive investors, not so much. But the aggregate bond index, a basket of bonds, a lot of different types of bonds in there, returned a positive 0.11%. So nothing to write home about. Superstar of the month was the S&P 500 in the stock indices. We just like to unpack the S&P 500, top 500 companies in the U.S., almost 10.5%. to the upside, 10.49% to the upside. So what do you think about that?
I love that.
Yeah, that's not bad.
No.
And, the portfolio side of things, we didn't really have to change a whole lot. If you remember through the month of March, we were focusing more on the long term and trying to tune out some of the noise that was coming from geopolitical perspective, but there wasn't a lot to report in the month of April from a portfolio perspective. But let's get back to that, big reversal.
Yeah, I know when I saw my March statement, there was a little bit to be desired. You haven't seen your April yet, but
that'll be better. And again, to your point, Carly, there was such a distinct material difference between end of March and end of April. But remember, we talked about not that surprising in this type of an environment. This type of an environment, you have to focus on that long term because those sharp reversals, you never know exactly when they're going to come. But we entered the month of April in a very oversold capacity. Now, what does oversold mean? Well, think about it like this. In the stock market, what ends up happening is you get oversubscribed selling pressure, and that brings the price of things down, right? Well, once everybody's sold, there's less firepower there. So maybe that's the best way to describe oversold conditions. Those who are going to sold have already sold. So we come into the month of April already stretched in that capacity. And then remember we talked about the backdrop from a long-term perspective has not been too disrupted at this point in April, that with geopolitical events in the Middle East, the war with Iran, that we would somehow change our longer term perspective, somehow think that it would dramatically impact corporate America and change the investment thesis that we've been working at. No, quite frankly, what we got are a lot of different headlines flowing around. And what played out in April? A stabilization of the headlines. You realize we got this big reflexive rally in the markets that, are the problems in the Middle East solved? No, they're not. But what you had was a stabilization of the headlines. And that's what led the markets to be able to have, the bounce that we got in the month of April, and you have to be there for it. You can't get cute in these types of environments. And remember, we unpacked last month what type of environment will we need to make changes for, and what type of environment are we monitoring and waiting and focusing on that long term. So anyway, you get the nice April statement now.
yeah.
Yep. Well, with that sharp market reversal, we also had corporate earnings in April.
Yeah.
What stood out to you most there?
Yeah. So, again, corporate earnings, just think of the quarterly calendar, if you will. So you close out the month of March. There you go. There's your first quarter. And then companies start reporting how they did in that first quarter. And remember, everyone, when you own a stock, you own a piece of a company. You own stock at XYZ company. We can't name individual stocks on this broadcast, so this is a fictitious company. XYZ Corporation, you own a share of that stock. You own a piece of that stock, of that company. Well, guess what that company's out there doing? You would think generating revenue, creating economic value. They like to report to you quarterly how they've done. How has that business done? So when you look, the month of April, the news flow starts from a corporate earnings perspective. And through the month of April, we got just above 60% of the S&P 500s reporting. Very good. And this has been a theme. I think that this is the 6th straight consecutive quarter over quarter double-digit increase in earnings. When you look at that, we haven't seen anything like that since going back five years, basically. And that was a robust environment. And remember, when you own a stock, you own that business. So what do you own a business for? Going out there and making money. So we want those corporate earnings to be strong. And they truly have been. When you look at the magnitude of beats, and when I say a beat, think of this. A company will give you guidance to how they think they did in the quarter. And then there's a whole analyst community who try to peg the number as well. And then you finally get the data and the results. Well, was it better than the analyst community and your guidance? That's called a beat. If you were under, well, that would be a miss. The beats that we have been seeing in corporate America, yet again, would lend you confidence in owning that basket of stocks. So don't discount the strength that we are seeing in corporate earnings here in the United States.
Switching gears a little bit, but really staying on topic, one of the common themes that we had in our client luncheons, questions that we received after the presentation, was around AI. And so just unpacking some of those things here on the podcast, what is Advanced Capital? What are we doing in portfolios as far as in AI investments?
Yeah. That's a great question. And it actually flows into the corporate earnings discussion that we just transitioned from, because there was a lot of thought that maybe these AI companies were not going to live up to the hype that we've seen surrounding them and their stock prices moving higher. But as we're hearing these companies report how that revenue that is tied to that AI environment, it's yet again leading to these beats. It's leading to expectations are being exceeded because it's actually proving pretty fruitful. So when it comes to AI in your portfolio, recognize that we're using investment vehicles that are diversified. And so you might not see a specific company, but remember, the investment vehicle diversification, they're baskets of these different separate companies. And when you look at a portfolio, even just look at the S&P 500, you'll find that there's a good representation in the tech sector. The tech sector is the one that is really shouldering the progression of AI, artificial intelligence, building the ecosystem, building the environment, creating the opportunities that are out there. Well, guess what? If we own those companies that are creating those AI infrastructures, ecosystems, opportunities, it's in your portfolio, and it is in your portfolio. So if you're ever thinking, I wonder if Advanced Capital or the portfolio that I'm in has an element of that exposure, it certainly does. And, one of the questions that would always come up is like, well, if a bunch of people are being disrupted and, they're losing their jobs because AI is taking them, well, there's not a great solution for the person that's been displaced, but for you as the investor, own the company that displaced them, because that is going to create the economic unit of growth, if you will. And if there's a detraction perhaps from somebody having a job, well, those two, when you look at the equation that runs everything, kind of the mathematics that drives the economics of it all, if you have a increase in the value of a company bringing AI forth and a decrease in perhaps a job, someone who is displaced, well, those two kind of offset each other. You got to own the company. And then theoretically, what would happen is if we are more efficient as an economy, as a society, there would perhaps be some sort of, social system that would care for that individual that was displaced. So kind of a little bit of a long-winded explanation there, but it's in your portfolio, and that's about the only way you keep up with it.
What about AI being used by Advanced Capital? Are we using it anywhere as a firm?
Yeah. So that's put me on the spot a little bit here. We use it. Yeah. How could you not? But not in the way you might think. we don't have computers making the decision on what goes into your portfolio. What we're using AI for is more efficiencies in, if we need to go through a bunch of just data, notes, things like that, and consolidate down to the most important pieces of it, and then archive that, tune out the noise, take the signal. We will use it in those types of things. So processing data and again, bringing out what's the most important, consolidating notes and highlighting the important aspects of it. So I would describe it as the place where efficiency from AI and human decision making intersect. And I think that you'll find that that's the sweet spot where we need to be right now. And I could get into a lot of examples of where a computer doesn't always understand what's the most important thing to a client, for instance. What's the most important piece of what it's prescribed to do? Is that properly understood by the computer? Oftentimes it's not, and it can lead to devastating consequences, and that's where that intersection is so important. And again, I've read a lot of books on this stuff, and I could go on and on, but I won't.
All right, well then we'll switch gears to the Fed.
Yeah.
What did we see? Some of the key signals coming out of the Fed in April.
Yeah.
I mean, I don't want to go to multi-part questions, but obviously, thinking of Jerome Powell, Kevin Warsh, and then any interest rate movements.
Yeah, so interest rates have been, just kept stable, for quite some time now. One of the things that we are starting to realize is that Kevin Warsh is progressing through the Senate confirmation process, and that's a good thing. Markets, and again, a good thing from, I don't know how you feel about it. Maybe you don't even know who he is, but it's a good thing from the perspective of the market does not like uncertainty. And with something as important as the chairperson of the Federal Reserve, it really, really, really is important to have stability in that space. It's important to have, some certainty as we progress through with such an important position. So, again, interest rates haven't changed a whole lot, at least from the Fed interest rate setting, overlay. But rates in general, there's been some volatility. And a lot of that has to do with right now our economic data points are being very, very sensitive to inflation just because the price of oil spiking. So we're seeing a lot of volatility in that inflation space, and interest rates are always going to be volatile in that space. But we thought that it was important just to acknowledge that that process, that changeover from Jerome Powell to Kevin Warsh is going smoothly. Not a lot's changed at the Fed, and I think that it's this moment of Jerome Powell handing off the torch to Kevin Warsh and not wanting to do a whole lot before he leaves. But soon enough, it's going to be Kevin Warsh. That transition will happen in May. We'll first hear from Kevin Warsh in June. So that is playing out, and you want it to play out smoothly, quite frankly.
Yeah, well, as we look ahead, into May and beyond, I think we're all excited for some warmer weather coming.
Yeah,
but
in the Midwest, no doubt.
Exactly. But what are we looking at, in the months ahead here, from a market perspective?
Yeah. So the month of April, we got kind of what we were hoping for and somewhat expecting, which was again that move back higher. Markets always overdo things to the downside and to the upside, quite frankly. So here we are in April, positive market environment for the year. So that's great. But I think that the market will test Kevin Warsh when he comes in. So be prepared as we start to see that changeover at the Fed. Even though Jerome Powell has said that he's not going to leave the Fed quite yet, still the market, I believe, will test Kevin Warsh. That will probably create some volatility, but the backdrop looks really good. If we can see through the things that are just bumps along the way, see through the things that are noise, and sometimes volatility is noise, and focus on what matters, I think that you can go to sleep with a smile on your face, the backdrop that we're operating in. So more to come in the month of May, but I think that there is tremendous promise into the future. Mm-hmm. Volatility will always be with us, and let's look for the handoff here at the Fed, and we'll keep you posted on it all.
Advanced Capital Management Incorporated is a registered investment advisor. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor before implementing any strategy discussed herein. Tax and estate planning information should not be construed as formal legal or tax advice. Always consult an attorney or tax professional regarding your specific legal or tax situation. Thanks for tuning in. We'll see you next month.